Good evening, everyone. Adam here with Bull Logic doing another market analysis. Hope everyone's having a good weekend this weekend. Hope everybody enjoyed last week as the markets rallied about 4% from that bottom. If you remember last week, we were talking about the best bull case would be to come in here and put in a bottom right above this support zone before it did bounce higher. And it looked like it did just that. We were looking for a target about right here where this underbody of that bear flag would come in, but we did end up breaking through that on Friday after pulling back that Thursday. Going forward, we are still in a downtrend as we're putting in a series of lower highs, as you can see right here and here, and lower lows, as you can see through here and here. So we are still in a downtrend until we break that 1334 level and put an end to that lower highs and lower lows series. Right now, the best bull case is to actually break this 1334 level, end that downtrend, come up in here in this 1340 level, begin to flag and consolidate, because as you can see, we're already short-term overbought. It didn't take long after a 4% bounce. So we want to consolidate under this 1340 level before we can get the momentum to break higher and push it into that 50-day moving average. Now, if you're a bear, on the other hand, your best bear case would be to go ahead and sell off here. This would be a nice little downtrend that you could start to form, or continue the downtrend. And you'd want to rally back down to this lower level, that lower support, break through that 200-day moving average. That would be the best case for the bears. If you're looking for a neutral case, which is usually filled with a lot of chop, then look for us to swing in here between that 20 and that 200-day moving average. We could start to see a formation of a inverted head and shoulders. As you see, we got a left shoulder, a head, and we could start to form a right shoulder right under this. This would end up being a good bullish scenario, but it would involve a lot of chop until we actually get there. Last week we did see a lot of chop in the markets, even though they were getting pushed higher. We did see some chop intraday. We're so used to selling the rips right now that when people see these push higher, they're automatically going to want to sell, just because that's been a trend as of late. So when it doesn't do that, we get a couple of washouts, a couple of shakeouts, and some fake outs, and then we end up just pushed higher through most of these couple of days. Thursday we did sell off a little bit, but we did push back above that 20-day moving average and hold those gains. Good move for the bulls there. Definitely a strong week for them. The best week in 2012. Helped to have a lot of news coming out of Spain of bailouts and countries being saved and people rejoicing across the world, etc., etc. Looking at the Russell, we got the same picture here. This is a little bit worse shape, but it is sitting on support of that 200-day moving average with the 20-day moving average. That'll act as good support going forward. We are looking for a takeout at 781 level, and then we got the 50-day moving average right above. Again, we are a short-term overbought, so we do need to see some consolidation, maybe some digestion days, maybe flag out for a little bit. Now, some things that are bothering me here about this picture is if we take a look at the VIX, we can see that it has been selling off from that high of that 28 level, and it's now down to 21, looks to be headed to 20. However, we did see a pullback off the lows on this VIX that we did not see a pullback off the highs on the S&P, which is something to be worried about. You really want these things moving in lockstep. If the S&P is going up, you want the VIX to go down. If the S&P closes on the highs, you want the VIX to close on the lows. Even with the weekend decay that happens in the VIX, which if you don't know, to market makers to make up for theta or the time decay across the weekends, they will drop the volatility, which will drop the VIX. That's how they make up for that time decay. Otherwise, they would be giving away free money if people just sold premium on Friday and closed it on Monday morning. So to counter that, they end up taking the volatility out. So what you'll see is a lower VIX on Fridays and a higher VIX on Mondays, just because they're putting volatility back in on Monday and taking it out on Friday. However, we did not see a close on the lows, finishing down only 2% when the S&P finished almost 1% up, is something to worry about. Taking a look at just some implied volatilities here, this orange line and the blue line. The blue line is the historical, the orange is implied. We do see that we do have some elevated implied volatilities here, so people are still a little scared going forward. And it's understandable with everything going on right now. People don't really know what to think. One minute country's getting saved, the next minute it's all false. So we could sell the news. Who knows? The futures are up right now overnight about 1% due to the news of Spain being bailed out. So definitely watch that for tomorrow. Don't chase this gap up. If it does gap up, watch these levels on the S&P. What you want to see is if we do gap up, are we going to hold those gains or are we going to fade those gains and then sell off? Is it going to be like a sell the news event where we just pop in the morning, put in our highs, and then drift lower throughout the day? I, for one, am not a big fan of gap ups. They're the hardest to trade. As if a market gaps up 1%, I mean, how high is it going to run? I mean, you get these few runners that run to 2%, but usually it's 1.5%, 1.2% run. And if you're already gapping up 1%, then you don't really have much room to push higher. So it makes it very difficult to take trades, both long and short. Looking at our economic calendar for this week, we got another light week. Monday's going to have nothing. We got some import-export prices on Tuesday, retail stuff on Wednesday or normal, jobless claims on Thursday, and a couple of production numbers on Friday, consumer sentiment. But that's about it. Another light week, which is always good because we're going to have a lot of news and information out of other countries. So definitely keep that on watch. Still not looking to swing too much here. This market still continues to be very choppy for me. I will continue to day trade as I see fit. So I'll need a little bit less volatility in the markets if I'm going to swing. Overnight volatility is just a little too strong, especially if the markets are gapping up 1%. They can easily gap down 1% if rumors turn out to be false or things are not as peachy as everybody thinks they are going to be. So there's your bull case and your bear case. Remember, bulls want to get over this higher or lower high right here to break this downtrend pattern, consolidate under this 1340 level before they break higher. Bears just going to want to go ahead and sell off now. Any push higher is pretty much going to negate that downtrend. So they're going to want to sell off, take us back below that 20-day moving average, maybe start to retest that 200-day again and get another break. And the problem with these V-shaped breaks is they're not very strong. So definitely bears want to have that in their favor. Bulls would have rather seen a consolidation or a bottom, a base being put under this 200-day moving average before it gets taken out. These V-shapes are usually just an overreaction and just working off of oversold conditions or a dead cat bounce. But definitely keep that on watch. If you're a bear, you just want to go ahead and start selling this off now. And if you're just looking for a neutral, then we're just going to sit here and just trend sideways through these moving day averages and maybe look to put in a inverse head and shoulders. All right, everybody, keep those three scenarios on watch as we did last week. They'll help you in the markets be able to figure out. You want to make sure you have longs and shorts just in case. Make sure you get your day trades ready, maybe your news plays ready just in case things get choppy, and then you'll be all set and you'll be prepared.